Hello, hello. Good morning, good afternoon, everyone. How are you guys doing?
Hey, good morning.
Morning, morning. All right. So you got Aditya uh, Gulian. I hope I'm saying the name correctly. J. Jose Marcus Peyton, Pio Satish Tarun Viv Yafeng um, Mufadal. All right. Some names are not familiar to me. Looks like they're or maybe I would have missed in some of the previous meetings. So for joining it for the first time, welcome. I welcome you all. Hopefully, you'll be able to gain something from it. Many names are familiar to me. The names I see. Welcome again. Thank you for showing up every weekend and make this discussion a little more interesting. So thank you.
Good morning, Vivek.
Morning, Aditya. Morning. All right. So what do you want to talk about today? How's the life been?
Just observing, we've had V-shaped recovery here.
Market tends to surprise, right?
I know.
Yeah, and I was had attended another meetup, and the host over there was saying that he said I just moved into cash 2 weeks ago, and when the tariff, when the market was down because of tariff and all that stuff, a lot of uncertainty. So I don't blame the host, but this is why it is impossible to time the market.
Yeah, yeah. It might very well go down again. So,
Who knows? Yeah, exactly. So we will talk about some of those things. Um, and I also noticed that there were some Zoom bombers even his meeting as well. And as you guys might recall, we had a Zoom bombers in our meeting previous Saturday. So if I see some of folks misbehaving, I think I'll have to do the same thing. Maybe I'll log the meeting. Maybe I'll take away your privileges to chat or to speak. Then, if kids don't behave, coach has to do something else, right? I
Are
don't
are
do it,
are
but
those bots? Or are
yeah,
they
I mean, there
people?
are Zoom bots, right?
They're not like actual people trying to like
There
hack
could
in,
be
are they?
there could be people behind it, but sometimes the pace at which
Yeah, they're
you
typing a
know
lot. Yeah.
take them out and then they come back in. Sometimes
Yeah.
I
It's
feel that they may be bots.
crazy.
Yeah. So if that happens, I'll take away the chat and privileges to unmute yourself and speak. So if you really want to speak, raise your hand and turn your camera on so that I don't know that it is a real person behind it. And if you misbehave, I'm gonna throw out. And next time you turn your camera on, I'm like, not the guy that I want to. I want to, let them speak in the meeting. Okay. So um, if
Vivek,
it
did
goes,
you explore, I mean, how to avoid those Zoom bombing?
now I see two Adityas.
I log on a bigger screen and my
Okay,
phone.
that's
So
cool. So
it's
yeah, because previous meeting we had two Satish and a lot of two names, and then I saw Zoom administrator, Zoom account, and all that. I would say bombers, Zoom bombers logging in. So anyway, so that's little for housekeeping. If everything goes fine, it's okay. Uh, we'll continue to talk. But if not, then I'll have to implement the rules. I'll take over the privileges to speak or chat. And if you have a questions, raise your hand, turn your camera on, and then ask questions. Okay. I know little inconvenience, but I think as a group, it will be better. No one wants to see any offensive messages or somebody disturbing our meeting. Cool. Do I have your yes on this one?
Yeah, that sounds good.
Alrighty. Okay. So let's proceed. So today, what I want to discuss is hold on, am I sharing the screen yet?
Yeah, I can see it.
Okay. All right. So for today, few things I want to talk about. One thing I realized that we have not spoken about crypto for a few weeks. So Ethereum upgrade went through, so I do want to talk about crypto this week. And some of you, if you are not not interested, I'm not gonna go into too much details, but just an overview. And also, the general stuff in the market. We had a downgrade in rating. Markets are up. And another big topic for today's discussion will be looking at some interesting observations from the 13F moves that we had, right? So 13F is a filing that funds and the investors, there's some regulation that if you have so many funds, etc., you need to file those 13Fs, or if your position is X%, right? Whatever it is. So they file with the SEC, and then that needs to be filed 15 days after the quarter end. And then we get to see, what, for example, Altimeter Capital is doing, what Stanley Druckenmiller is doing, right? What Monish Pabrai is doing, right? So we will look into those 13Fs, and I actually consolidate the 13F information from almost 80 fund managers. But then it gives me much better idea, right? Looking at one fund manager, at a particular stock, I don't know how about the other fund managers, right? So I consolidate data from almost 80 fund managers. So we'll review that. And of course, we'll talk about some company information, some stocks, the general stuff. And then we'll open it up for breakout rooms. So maybe by 11:30ish, 11:45, maybe we're done with that general stuff. And then I'll we'll move into the breakout room. So if you want to talk about day trading, you could. Want to talk about some meme coins, go ahead and talk on that. Or about options, we can talk about that as well. So that's overall plan. I see a few questions. Will the recording be available later to watch the session again? Yes, the recording, generally I am able to post it before end of day Monday. I'll be traveling tomorrow, but whenever I post it, I will update on the meetup saying that the recording has been updated and is available. Okay. Ross is asking, why is Moody's downgrading before Congress meeting on Sunday on the Hill? Oh, who knows? I mean, I don't know. Number two is I don't even know if that even matters. We had a downgrade. I think it was S&P had downgraded US rating in 2011, right? And since 2011, look at SPY 500. As an investor, didn't really matter. Of course, at that point of a time, I think there was a lot of concern on what's going to happen and all that stuff. But let's go back to 2011. Where am I? This is 2006. This is 2010, 2011. Let's say somewhere over here, right? Let's go to the mid of 2011, which would be somewhere here. What else? Like 130? Or maybe this is a downgrade. I see a big dip. So let's consider this as a downgrade, and we had like 114, 110. S&P is now touching close to 600. And then in 2022, or was it 2023? Last 2-3 years, we also had a Fitch. They downgraded US credit rating. Didn't matter, right? And now Moody's was the only one that still had pristine rating for US, which was AAA. Now on Friday, after the market closed, Moody's also downgraded US government's credit rating, which is now, I think they have a different scales, but it is like one notch below AAA, right? So now I think all the three rating agencies, they have US credit rating as one notch below the AAA. AAA is the gold standard. That's what US was for sure. And I don't blame them. But I think this is like, I don't even know if they don't do it, and then we will shout at them saying, hey, you're not downgrading it, or you're not being truthful to your profession, like they were not during the great financial recessions. They basically gave clinch to all those mortgage bonds that had toxic assets in it. Like, I guess those who were appraising those bonds didn't even bother to look what those bonds actually hold, right? And then they gave them, yeah, it is investment grade bond. And then, of course, none of them went to jail, which is another sad part of how we deal with the things here. But we know what that caused. That caused such a huge, almost recession across the world. And hopefully, they are now being more truthful. But I don't think it actually matters, because at the end of the day, if let's say if another countries they want to first of all, US dollar is still the world reserve currency. They will still need to hold the dollar. And number two is, where else are you gonna go? Which is such a big economy like US. So I'm not happy that they're downgraded, but I'm not gonna sell my stocks just because, oh my gosh, they've downgraded us. Now everyone is gonna hate us and it'll be difficult for our companies to raise money. It's gonna be a little difficult to for the US government maybe to raise money. So the fact that US government has been trying to bring down the notes, the yield on the notes down, that might be difficult. But we'll end up printing money. Right. So, but I'm not worried about it. I think market did react to that. I actually did not notice. No, this happened post market, right? So didn't matter. But maybe after that, in the after market close, then the market had reacted, and like I saw later on, why is that few things are showing up as a red, because it was all okay. And then I realized, okay, the Moody's are downgraded. The algos will just run amok. Greg is asking, did you say market is up on downgrade? No, I said the market was generally up for this week, right? So market was up for this week. Post downgrade happened post market. After that, market has gone down a bit, right? But it is still, I mean, we closed Friday almost where we started the year. So where we started year or here, right? We are actually up 1.64% as of Friday close. We are up 1.64% for the year. So what a V-shaped recovery, like Aditya was mentioning. Yeah, we did have a V-shaped recovery. And the most, I would say, depending on which side of the trade you are, it could be vicious or it could be the greatest rally. This huge green candle that we got on 9th, had a huge swing on the portfolio. Like these, if you miss like some of these days, it's very difficult to beat S&P. And that is why it is very difficult to beat an index. Even though smartest people try to beat on Wall Street, but we have shared that chart from Spiva, right? That on an average, 65-70% of all the fund managers, they just don't beat their index. And if you are invested in S&P, we are all better than 75% of the Wall Street managers. Greg, do you record? I'm driving. I think I already addressed that question. Jose, do you have any opinion on the direction of oil prices this summer and gold as well? No, Jose, I'm not a macro forecaster, because macro forecasting doesn't work. So I would rather spend my time on what actually works for portfolio. And I have no opinion on where gold will go. If we go into, because it is depending on so many factors that we don't know what's going to happen.
Well, like just technically, do you have an opinion on it based off the chart?
No, I'm not. I generally don't.
Okay, I got you.
Big fan on chart. Even though I would like to learn a few more things about it.
What about gold companies?
Gold has been on tear, and maybe let's look at the GDX, which are gold miners. I mean, gold has been in tear for 2 years.
I think gold is just pulling back, and that's going to go higher. But yeah, I'm mainly concerned about the oil because I have a short on it.
Yeah, no, I don't have a short. I mean, I have a short put on XLE because I don't understand the nuances of oil industry. So I have a.
Oh, so you're shorting oil too?
No, I'm not shorting. I have a short put, so I have a bullish trade.
Oh, so there you go. I'm
But
on
generally,
the
I will
opposite.
have a short put. Let me put it this way. I would generally have a trade across different asset classes, right? I'll give myself some room for error, and I'll say if it falls down beyond this, 5%, 10% if it is down, I might pick some positions. And when I have that, I'll probably sell a call against it. And if it stays range bound, you reduce your cost basis. So I have a
But you're
short put.
basically you're bullish on it. Then.
The trade is bullish, but
Yeah.
I've given myself room for error so that even if goes down, I'll still be okay. Right?
Sure. Okay.
I generally will I want to have my portfolio with uncorrelated assets, and hence I'll have a gold. I have
Sure. Yeah.
energy. I have healthcare ETF, which I actually did a short put after the UNH. So we'll talk about UNH as well.
Okay.
Right. Credit rating downgrade, higher interest rate. Yes, that's where the yield stuff. That's a concern in terms of our bond yields going higher, and we have to refinance $9 trillion this year. So we'll see how that goes. But if at the end of the day we end up printing more money, that'll be great for some of the crypto assets. Mufada, hopefully I'm saying your name correctly. If not, please, correct me. So he asked, because the current US policy has shaken investor confidence, Moody ratings doesn't really matter. S&P performance does not indicate overall health of market. One has to evaluate overbought, oversold conditions, frankly, and manage the risk as best as they can. I agree. But if only you understand how to invest or understand the business of individual companies. I think most of us out here are part-time investors. I used to be part-time investors, moved into full-time investing. I don't work for any firm. I just manage my own money a couple of years ago. So, but if you are doing along with your job, or if you're doing along with you're running your business, and you don't have a time to sit and now review the company's earnings, etc., then you might just look at owning the overall market. I mean, looking at the history, that has worked very well. And when I say history, you can look at 10 years, 50 years, 100-year history, right? 10% performance is fine. Will you get like 20% every year? Probably not. Right? But that's better than staying out of the market. I know of people who have stayed out of the market in cash for years because they're afraid of, oh, I don't know how to analyze a company. You don't have to. You can still go and, based on our asset allocation, buy a well-diversified ETFs. S&P is one of them. That's what I meant to say. But maybe next few years could be a stock picker's market. Right? But then you need to train yourself to be a stock picker. Worst thing you can do is that we don't know how to analyze the companies and the businesses, but then we go and pick individual companies because everyone is talking about those companies. Right? Hey, I heard XYZ on a podcast or on such meetings like mine or on a YouTube, they are talking about companies. This must be good because everyone is talking about it. I think that's the worst thing to say, thing to do. Good morning. I have 20,000. I want to buy long-term stock. Give me some suggestion. I cannot give you suggestions because I don't know about you, Ravi. These are like, investing is like medicine. It has to be very personal to you. And it has to reflect what you want the world to be, right? So I don't know what your time horizon is. I don't know what your risk appetite is. I don't know when you need the fruits of this. I don't know, how you feel if the stock, your positions goes down 20%, would you lose your sleep? I have no information along all that. And that's why then I can't tell you what stocks to buy. Right? And I don't want to blow you off, but there have been instances, because I've been talking, for a few years, in which some of my friends, they have followed me, but probably they did not have either the wherewithal to hold through the downturn, or they did not have the similar time horizon, right? They chickened out when the stocks were down. I made money on the same stocks, and my friends did not. So I can't tell you what's the right thing for you. I think all I want to discuss in these meetings are how should we analyze the business, how should we prepare ourselves mentally. I think that is way more important. But less talked about topic is emotional equanimity while investing. IQ, you just buy S&P 500. There are tons of ETFs. You want real estate, XLRE. You want healthcare, XLV. You want tech, QQQ, XLK. You want utilities, XLU. You want consumer staples, XL. There are hundreds of ways to invest on what you want to. But more important homework that I think everyone needs to do is understand yourself first before jumping into buying the stocks or jumping into the stock market. That's what I've found is I think the biggest mistake people do is not understanding themselves and just go in the market because your friends have gone in, or you see your neighbors doing it, or you see your spouse doing it, or someone close to you doing it. So Maurice, it took 5 months to get back to where we were. Yeah, it's and let's say if you had gone on a vacation to places, if you've gone on a vacation to places where you did not have an internet connection, and you would have missed all this roller coaster ride and come back and say, what happened? Why was there so much of brouhaha about the markets? Everything looks fine. Right.
I would have said, what a great vacation I had.
Yeah, if we were out, I think that's the best vacation you had. Ramka is asking, Vanguard ETF equally good as SPY? Yeah, Vanguard. Oh, just one sec. Yeah, Vanguard is equally great. The only reason why I don't do Vanguard is because Vanguard's the optional liquidity is not in Vanguards. But if you're not interested in options, etc., yeah, VOO, very low expense ratio. VTI, which is overall market index, total index, that's also great. So yeah, if you don't sell or covered calls or don't do options, then yes, Vanguard ETFs are great. I focus on the ones which are optionable. So I have one more criteria of filtering when I want to, trade in a certain, I would say takers is how optionable is it? Liquidity in the options market as well. All right, so I think I addressed the question. So maybe we get into our session today. Okay, as always, anything that we discuss here is only for education and maybe entertainment. It's not a tax advice, not a financial advice, not an investment advice. If you lose money, it's your fault. It was you who pressed the buy button or sell button in any case. If you lost the opportunity to make money, it's your fault. Don't blame CNBC. Don't blame let's say Tom Lee or whatever those CNBC heads who come and talk about it. At the end of the day, they are not asking you to buy or sell. Right? Their motives are different. Don't blame Jim Cramer. I know he gets a lot of heat, but come on, he gets paid to get eyeballs, and that's what he does. Right? You need to figure out whether to go behind someone who's a great marketeer or go behind someone who's a great investor. Okay, so let's. So before we get into the regular meetup, quick updates. This week I was invited as a guest speaker with one of organization in Silicon Valley to talk to some of the angels investors. So it was a great time. It was a good time spent talking to new investors who trying to figure out how to invest or how to So I actually started discussion of whether you should or should not. And then we had some good discussion. So I would say that was an evening spent well. I generally don't, in these meetings, we don't get into the non-public stuff, but it was good to talk about the non-public stuff with a bunch of our angel investors. So that was an evening well spent. Other thing, there is a workshop coming up from Schwab. I thought I'll share that with you guys on July 11th and July 12th. So there are 2-day session. One is on technical analysis. Another day is on option strategies, right? So I will attend this. It's an opportunity to meet other investors, right? And I think the first one probably more useful for me. I do want to understand some of those technical analysis. I do use some of the indicators on the chart, but it's never, I would say, there is no harm in learning new stuff. Whether you use it or not, it's different. And so I said, I thought I will attend that. So if those who are in Bay Area, right, if you are attending this, it will be a good opportunity to meet you guys in person. Okay.
Is there a
Third,
cost?
sorry, go ahead.
Is there a cost?
No, it's free. Let me share this. There's no cost. You have to register, and okay, because I registered to it, there is no cost to it. I didn't pay, but I did indicate that I'm a customer. But I think even if you say you're not a customer, I think you should still be fine. Again, just try and just register. There's no cost to it.
It's a free meeting.
Yeah. Yeah, it didn't ask me to pay anything. So I attended this last year. I think Niyanka, I don't know if she's in the meeting today, but she brought it up in this session. Say, hey, this is a meeting happening, and thanks to her, I attended meeting, and then I met a few of you in person over there. So this time, I realized that, hey, this is meeting coming up. I thought I'll share. Third one before I start. Mystery chart. Which one is this? Any guesses? This has been disrupted by whatever we are seeing in the technology right now in tech sector. A new tech has sprung up over the last 2.5 years, and that has disrupted many businesses. This is a classic case of the disruption. It has upended the business model of this company completely. And then the stock price, you can see from almost 110 to like 70 cents in what, 4 years?
Is it check?
Exactly. You're right. So those who don't know Chegg, Chegg is a company that allowed students to get homework help, right? Maybe find answers to the assignments that your professor has given or your teacher has given in your school, and then share notes and all that stuff, right? Now Gen AI is there. You can just post it in Gemini or Chat GPT or Claude, whatever LLM model you want to use. Why you need to pay to check? Of course, they had other business of secondhand books and all that stuff. But now, who wants books? You can create your own personal tutor using Chat GPT or some of these LLMs. Maybe I'll use the name Gemini, but I'm talking about generic Chat GPT, right? Sorry, generic LLMs. So yeah, why do you need that? You can create your own personal tutor, which will adjust to or your own behavior and how quickly you learn it and craft the lesson. You don't really need the books. So completely upended its business model. I think now they are down to, after every few quarters, I'll hear that they are basically firing people and cutting down the cost. I'm like, why do you even exist? Just return the capital to shareholders. Right? Sometimes the business don't have to exist forever. This is the case maybe where the business, maybe if they are pivot, sure, but this is the case where this business, some of this business should just return the capital to the shareholders and say, we are folding up. It's a very difficult decision to make, to, say when to fold off, right? But the market will catch up and tell you, come on, there is no value in it. So sad. And I know during, I think 2022 or 2021, during COVID, this was being talked about as a hot stock. And it was a hot stock, because suddenly everything went online and their subscriptions grew like crazy. But came LLMs, completely disrupted it.
What announcement happened like August 2022? I wonder how do people know?
August. So, are you talking why there was a dip here?
Yeah.
That
So
may be
what?
so that may be due to their own financial performance, right? But I think after 2022, when the LLMs were released, ChatGPT was released, which I would say over here, then we saw there is no catching back. I think this whole stuff from 2021 all the way to 2022 and all this is because the valuations have gone up so high during 2021 that a lot of our future growth was already priced in. So from 2021 peak till 2022 end, I think that's the stuff which you would see in many of the high price, not so profitable tech growth companies. But what
Is that announcement date that when the
maybe
gap down?
I don't know what this gap is around. I think you're probably referring to this drop. I don't know what this drop is about. But what I'm looking at more importantly is out here, right? So it was like $25, close to $25. Now it's up to almost 70 cents. What's the ticker symbol? Check. CHGG, I guess. Yes. CHGG. Is this in person or Zoom for others to attend by Zoom? Okay, Ramka, you can check on the URL. Yeah. Ross, huge HNS on this chart. Oh, that's like a head and shoulders on this chart. I don't know. What exactly does that mean? It does look like head and shoulders on these two sides, and maybe sometimes inverted head and shoulders. But sometimes I feel that you see, like on a cloud, you see the images. It is because you want to see the images. Sometimes I see that I see this in the chart because that's what I want to see, right? But so what's an implication of that, Ross? Head and shoulders. I hear this like head and shoulders, double head and shoulders, but I don't know what exactly does that mean. Okay. All right. So key economic news and data. So we already talked about Moody's downgrade. So I'll skip that one. This one we talked about it last week, and the market is still having fun after the tariff reduction came. I think the important thing is looking at some of the April CPI data. So CPI data was released, and we had basically 20 basis points increase month over month and 2.3% increase year over year. So it is still above where the Fed wants it to be. Fed target is 2%. I don't know why they kept 2% as a target. Somewhere I had read it that the 2% came from New Zealand. And don't know what was the contest. Maybe I forgot a few years ago I read that the 2% target came from New Zealand on something related to dairy. And then the bankers just adopted it. One banker adopted it, and then everyone started talking about, okay, inflation rate is 2%. And I think probably may have to do with the birth rate also. Saying if the population increases by 2%, maybe we should have our economy increase by inflation by 2%. Anyway, but we are still higher than where it was, where the Fed wants it to be. But I think we are going towards the right direction. So market is also hopeful that we may see some Fed cuts. So last week we look at the Fed Watch tool in terms of the probabilities of what market is expecting. So I think we are expecting like higher than 50% probability of the first cut in July. But if by the time July, the 90 days of the tariff pause will be over, April, May, June, July. I don't think we will see the impact of the tariffs just yet by the time the July meeting comes along. So we'll see what the numbers of CPI numbers, etc., are there at that point of a time. Then we'll know what Fed is going to do. Core CPI, which exclude all food and energy prices, that's also steady 2.8%. That's a good news. But if we see increase in prices because of these tariffs, even though Now we are talking about 10% as a base tariff and China 30%, but still it is higher than where it used to be. So either the companies eat the cost or consumers reduce their consumptions. That will bring down the GDP. Then we have a concern of recession or stagflation, or we pay up. Only three options. So we had a PPI data, which is Producers Price Index, which kind of give you some insight into where the inflation might go later part of our time. Because if the producers or the manufacturers, if the price become higher for them, there are high chances that they may be passing that on to consumers. Not always. Some companies, if they have a fat profit margins, they will actually eat up the cost. Some will not. But let's say on an average, they will probably pass on maybe half of the cost, right? So PPI increased 2.4%. So kind of in line where what we saw on the CPI basis, right? Retail sales data also came in, and we are still spending, guys. We are still spending. Then you cannot have recession if we are spending like 5.2% higher in terms of retail sales report. So consumer is still spending, means we are not yet feeling the pinch of either the higher prices or any kinks in the economy. I mean, we will start once the companies start to fire people, or we start to see uptake on the job losses. That's where consumers will pull back on for spending. University of Michigan Consumer Sentiment Survey. So the sentiment survey was like almost 50.8. This is lower than where we were expecting it to be. But I have one huge concern on, I know market also had jitters after the consumer survey numbers came out saying, oh, consumers are not feeling any confident. They're feeling pretty they're feeling pretty miserable about the future, and hence the sentiment rating is so low. But I was surprised to find out, because then I went and asked Gemini, tell me how many users do they even survey. So it's on an average around 400 in the preliminary survey, like 400, 500 people. I'm like, we are 300 million in US, and then you're like on an average, maybe in this case it's like 700, right? Let's be very generous and say 1,000. You calling up, so they basically call up people and ask questions. And maybe you reached out to 1,000 families and asked them questions. Do they really believe this? I mean, should I put any faith on these numbers? If it is a sample survey size is so minuscule, if there are any statisticians, they'll just laugh at it. It's not even a statistically valid sample size. So take it what it is. I'm not gonna make any changes based on what Michigan Consumer Sentiment Survey comes out to be. Right. Job loss claims, they're steady at 229, so which is good. It means that depending on which side, because good for one could be bad for other. And you might be wondering why the job loss claims holding steady is bad. Bad for others, those who are thinking that if the unemployment rises, if the job loss claims will rise, that means companies are not doing good. That means the economy may slow down. That means then the Fed will have a more incentive to cut the rates. That means we will get more liquidity. That means more money in the market. That means the market will go higher. And hence, there are these second order effects. Then you might think, hey, you know what? It's good if the jobless claims actually go higher. On the other side, if you're a job holder, you're working, it's bad, right? So, but I think for our overall economy, this is good. But this also means that Fed gonna be a little more cautious in terms of whether they want to cut rates or not, right? Inflation number is still higher than 2%. Jobless claims are also like 229, right? So it means their main focus is lower prices, maximum on employment. So employment market is good, then why Fed need to cut rates? But it means our economy is stable. In stable economy, Fed should not interject. We should not need the dose of, you know, from Fed to go high in the markets every time, literally. What else? We also saw some good rally on the tech sector. And if you look at the tech side, let's go to QQQ. From the downs at 402 to 520, basically it's like up more than 20%. And technical, if you're a technical TA, if the market is up more than 20%, it's in a bull market. Right? Do you feel we are in bull market? How many of you think we are in bull market in the tech side? I think I have that question later in the document, but anyway, we talked about the tech. So let's go to that side. How many of you think, where's the tech one? Yeah, so tech is up more than 20% from its lowest point, I think 25%. So is it a bull market or bull trap? Chartists, what do you think? On the QQQ, we are up more than, I guess, 25%. It's close to 400. 25 will be 100, and we are above 120 points. So
only time will tell.
Oh, it's in hindsight. Yeah, we'll get to know later on, whether it's a bull market or it's a bull trap. The bull trap will come to know if eventually the markets continues to slide down, then we will say, oh gosh, it was trap. But it goes down and eventually, it crosses the new all-time high, then, oh my God, it's a bull market. We don't know. We will only get to know in hindsight. I see some question. Ross, Trump just told Walmart to eat the tariffs or not raise prices to consumers. So I think Walmart has come and told that they will be very judicious in terms of which goods they're going to raise prices on. They are not going to raise prices on groceries. They are not going to raise prices on, I think, some of the lower food items, etc. But yeah, if you want to buy some fancy watch, maybe they will raise prices. And Tim Cook told him to mind the government business. Yeah, I think he's not happy, right? He made a statement while he was addressing the gathering in Saudi Arabia. He said, Jensen, you're here. Tim Cook is not there. He deliberately called out Tim Cook because he was not there. I mean, there's a whole bunch of CEOs delegation that went with Donald Trump, and I think Trump signed a few deals with these Gulf countries. Boeing was very happy about it. Boeing got almost $200 billion. Like overall, a bunch of deals being signed. A lot of AI companies, chip companies, deals were signed with them. We're gonna be building huge data centers in Gulf countries, so NVIDIA will be happy. AMD would be happy. I think NVIDIA, AMD, they had some decent jumps. But he definitely called out Tim Cook, saying, Jensen, you are there. Palantir CEO was there. Few other CEOs were also there. So look at NVIDIA. A nice jump on NVIDIA. AMD also went high after the whole announcements in the Gulf. Look at jump on AMD. And I think now the Donald Trump is saying, why are you building phones in India and not in US? So he did commit, Apple has committed $500 billion, but then they also mentioned that they're going to be building phones in India. Corporation can raise prices and can stay solvent long, then Trump can say popular. Asif said it's a Trump trap. That's interesting one. We've been talking about whether the market is a Trump put or not. First, I think second, third, and fourth week of April, we realized there is no Trump put. But now over the last 1 week, we have realized that maybe there is a Trump put. There is no Fed put. We haven't seen Fed put yet, but we are seeing Trump put. In 2022, the first spike was a trap. We'll see if it follows that path. Guys, in 2023 and 2024, we had over 20% gains. 3 times. Doing it maybe happened only once in 75 years of history. Remember, we have looked at many of these charts at the start of the year when a lot of predictions were coming out saying how the 2025 would be. And then we looked at in the history of our stock market, last 75 years, how many times we had 2 consecutive 20-year plus, and then also the third one, I think maybe only once, right? So won't be disastrous if we stay flat or maybe we stay down this year. I mean, you would have still made money. Okay, don't be too greedy and be honest. Right? Looking at where we were in last 2 years, you still made money. Let's say the market stays down 5%, 10% this year. But yeah, we always want the markets to go higher every year. That's not it's going to happen. Right? Market base will do whatever it does based on what's happening. So Niyanka, maybe you joined a little late. So we talked about Moody's downgrade earlier. iPhone will, okay. All right. So we saw a strong rally. There were some official speeches from Federal Reserve, and I think one of the federal governor, they did talk about that they may be looking to cut rates. You know, it's now more amenable. Again, we don't know. Eventually, Jerome Powell will decide, and he won't tell us until the day when the FOMC, when he gives a speech after the FOMC meeting, right? Little weakness in the gold price. You want to call it as a weakness? Sure, maybe this week there was a weakness because the rest of the tech stocks were high, but what a performance has been for gold over last 2 years. Right? The 12 years of gain has come in last 2 years. So remind you, this is GLD says 170. All right. Let's go back and see, we were 170 in 2012. We were 170 in 2012. So we had a huge, this pattern, cup? Huge bottom, and took us 10 years to just get back to where we were. And then last 2 years, boom, we are up almost 80%. Right? Huge gains in last 2 years. Is it too much? Anybody's guess. I have no idea. I still hold some gold. I did sell some of it in this rally, and I still hold some. If it falls down, maybe then I will refill what I sold. If it continues to go up, I'll hold. I don't know what the market is going to do next.
Do you do costless collars on that, Vivek?
Sorry?
Do you ever do a costless collar to kind of like...
No, I understand the collar. I think I have a collar only on one stock right now. Collars I will do only to hedge for a particular event risk. Right? Like on the presidential election day, I put a collar on generally like index ETFs, but on my regular investments, I don't do collars too much. Again, it depends on, let's say I have a collar on one of our stock because that stock has given me, nice returns, and then I said, you know what? maybe I'll try to protect the returns. If it goes up 10% and gets called away, fine. And then I did a collar on that one. But at an overall portfolio level, I don't have a collars all the time. I will basically have a short calls to manage my deltas. For an event risk, I might try to do a collar.
No, but that's what I think you're saying the exact same thing I am. So if you had gold for the last like 3 years and it ran way up, it's kind of like Google the same way. I had it run up quite a bit since I held it for such a long time. And I'm like, okay, I don't want some single event to wipe me out. So I've been doing collars on the large gains in the same manner. So,
yeah, but I mean, yeah. So if you're doing collars, you're also capping up your upside. And in your case, that should be fine because hey, I've already had so much gains, and I'm perfectly okay to not make more than whatever your short call, whatever delta that would be, or however percentage it would be, right? And I've
actually found though that the put actually ended up making me some money sometimes, like on the dip, like we recently had. So I end up getting a bonus.
Yeah, yeah, it does happen. But if you had done collars in, let's say, 2023 and 2024, those collars wouldn't have worked out great because you would have lost on the opportunity side. I mean, those collars, it would have been good for your portfolio up to a certain level, and then you would have lost the opportunity of making anything beyond that. So yes, so I do collars, but or a specific, mostly on an event risk. Okay, and we also saw some rise in treasury yields. So I think on Monday we'll get to know after the downgrade, when the bond market opens, what's the new yield. And where is, let's Google, where's the 10-year yield currently is. 10-year, let's say 10-year treasury rate today. We are 4.45. If this goes above 5, I expect to see some sell-off in the market because that's generally a threshold and which the market starts to get jittered. Above 5, not gonna be good. But we'll see what happens on Monday. Overall on the market side, I think we already talked about it. We have a bullish tone because of the temporary reprieve between US and China. And this is where China is important. I mean, the first country with which we had a deal was the UK. Markets went up. And I'm like, why? Because UK, we don't have huge amount of, I mean, the biggest 800-pound gorilla is China, with which we have no deals. And UK is a smaller portion. But then we also had a deal with China, at least a pause for 30% tariff on Chinese goods for 90 days. And then we will figure out what needs to be done. Trump prides himself in being a deal maker. So I guess he will make a deal. Maybe we will end up doing 10% like we have for everyone else. And yeah, even that will be fine. It will still be more than what we currently have. So Trump can also come back and say, hey, I started 145 because this is how I negotiate, and eventually I got more money coming into US. Right. We'll see. Sector-wise performance, we are positive for the year. And I think industrial, utilities, financials, consumer staples, information tech, we are still, I would say we just evened out despite the 20% rally. But the consumer discretionary is still down almost 5%. And I think healthcare is probably being dragged on by UNH. But I'm surprised discretionary is still down 5%, even with Tesla being up so much. Right? But still not a bad year. So we were talking about bull market or bull trap. This is another chart. Bear market rallies, which is also called bull trap. We had 10 of these in .com bubble. So generally we say .com bubble burst in 2000, right? 1999 was a peak. It burst in 2000, but we bottomed out in 2022. Right? But before we could bottom out, there were these 10 rallies, right? In 2000, then we had another rally out here. Let me put it this way, right? One rally here, another one, one more. So these are the 10 rallies. Every time you think, oh my gosh, it's done, it's over, and then market will jump 5% and probably will suck in a few people who are like, okay, because I think it's time to get in now. This is why I'm not a big fan. I'm trying to time the market. I don't know whether we're going to have a bull market or a bull trap. I just want to make sure, depending on where the market is, I'm going to manage my deltas accordingly. So I'm not adding any more deltas to the portfolio right now because the market is already high. And if I had a covered call, I would let it called away and have some cash available. I'm not getting out of the market. I don't know, maybe it'll continue to go high. But I'm not becoming too bullish and saying, oh, okay, let's double down on the short puts. Idea is you have to figure out how you want to trade the market, and there are instruments available. Vinay is asking, so the key question is that, is the tech sector in a bubble or is it fairly valued? I don't. So we will only get to know it's in a bubble after the bubble burst. Until then, if the bubble keeps growing, then everything looks to be, is it so fair valued? I think we need to look from a company to company perspective. Because there are companies which are available at a lesser than fair value. There are companies which are egregiously priced. We will talk about one because some of the covered calls I did not want to defend. Overall, I don't know if it is fairly valued or not.
Yeah, I guess, I think in the .com, right, at least the tech companies, I think from what I remember, I'll have to check, right, the PE was quite high compared to where it is now.
Again, I'm not a big fan of PE when it comes to the technology companies, because the way the accounting works on PE, the PE measure, we have been dragging it from our industrial economy phase, manufacturing phase, and that actually doesn't apply directly to technology company. So if I'm looking at technology company, I do not want to take, and I know market still looks at PE, right? But when it comes to the tech company, I want to create my own version of PE. And I'll give you a reason why.
Yeah, and I agree with that, except that I think in the .com, the E wasn't there at all, right? In some of these.
Yeah. Nowadays we have some companies which have very small E, but a very huge P.
Yeah, but if you look at, just take even NVIDIA or looking at Alphabet earnings, right? It's, I'll have to look at the report, right? But it added, I think, $40 billion in revenue from last year, right? Alphabet, right? That's literally like the whole revenue of a big Fortune 500 company.
Oh yeah, so Alphabet is I would say fairly or somewhere underpriced.
Yeah, I'm just giving you an example, right? Because I normally don't look at these reports as much as I should, but when I looked at the actual report, I said, "Wow, that's like amazing, right? A $300 billion company or whatever growing at that rate is adding literally is adding a Cisco every year, right?"
Oh yes, yeah. Alphabet had a great result, and their search grew, which everyone's saying that it's going to be a dead company. But its search business also grew. So since we talked about Alphabet, I don't know if we actually analyzed Alphabet. So let me quickly get through the Alphabet earnings, right? So revenue was up 12% to $90 billion. This is a quarterly. We're not talking about yearly.
This is quarterly.
This is a quarterly revenue, $90 billion gross. Look at operating income was $30.61 billion operating income, $36 billion of operating cash flow. They beat on both revenue as well as EPS. EPS up almost 50%, but again, net income was up 50%, but then some of the net income also comes from investment gains, right? So Alphabet has a stake in SpaceX, right? And the private valuation of the SpaceX also added to this net income. That's why if your net income gets screwed up by these investments, then your EPS or the PE will get screwed up. That's why I'm also not a big favor of the PE.
I see.
But all metrics are pointing right direction. And they have a $75 billion of capex they committed, $70 billion stock buyback. Good thing is Google Cloud was up 28%. Like Amazon Cloud is growing at 17%. Google is growing at 28%. Look at this, YouTube, $8.9 billion. YouTube is a bigger business than Netflix.
Right.
And advertising still growing by 8%. So I think overall, the results were good. Hold on. Then there is a Waymo and all that stuff. And just looking at, let's say, 3-year CAGR, not even 1 year. If you look at 3-year, growing their net income by 28%, growing their free cash flow, operating cash flow by 13%, growing their free cash flow by 7%. I mean, everything is good. I mean, from a results perspective, things were good, but it's got an overhang of the judicial.
I guess my point only was that, it's, I think that .com was a different era, right?
.com was, but here also, right? We could get too much overhyped on one particular side. Me personally, I don't think we are there yet, but what do I know? Because companies like the biggest companies that have benefited this, in the last 2 years, NVIDIA's, look at the performance. NVIDIA became cheaper after it went up like 200% because their business itself grew much bigger than that, right? So it's not that bad. Okay, so Greg has raised his hand. Yeah, go ahead, Greg. You want to ask a question?
Yeah, so I heard, I think it was a JP Morgan analyst making a commentary about how all these guys are making, massive CapEx investments this year. And, it's going to impact their earnings, at least in the near term. And of course, they expect the payback once the AI starts to kick in, all the data centers, that kind of stuff. So, and hopefully that works out as expected, but it could be that maybe it doesn't return as much, profitability as expected in the near term. The overhype that you're mentioning, I'm just wondering if that's kind of what you're saying, or what do you think about the delay this year? And so they were saying the S&P would be flat because of that. We're not expecting as much growth at least in the current year, or even maybe next year.
So I've also heard, some of these other Wall Street firms trying to change and get back and raise their targets on S&P 500. So depend on who you listen to, right? JP Morgan saying that's going to be flat. Some others are saying now they're putting targets of 6,500 on S&P 500. And the funniest thing was the Goldman Sachs, because after every news that's coming from president, Goldman Sachs will come and change their percentage forecasting for recession. Like after a tariff, they were like, oh, we will definitely have a recession. Then they toned it down to 50%. Now they change again. So I think analysts have to react to every news, and that's what they do because they get paid for doing it. But I am not, me personally, not changing my opinion based on what the analysts have to say, because they look only for the next 12 months. But I do think about the fact that if we are not able to get the benefits from these AI stuff, then does all these investments, then won't pay off. Then will there be a weakness in the market? Sure. But I don't know how long we continue to wait. So first I thought maybe in 2024, market will start to see some payback, but that didn't happen. And market was pretty happy as and when every company was saying, we're going to commit, we're going to build data center, we're going to invest. And market was pretty happy about it. In fact, the share went up when they say, we're going to invest in buying more chips. So looks like market has much more tolerance for investments, because if the whole AI market will be so big for the initial players, for the initial few years to milk it, that if you spend enough to make sure you're ready to cream the market, and then the whole AI market, then investors are willing to give you a leeway of, okay, go ahead and invest. You win in that market. But at a much longer term, let's say 10 years, 15 years down the line, I think it will cease to be a differentiator, because once every company has it, then no one has it.
What about Amazon's, like they're doing their own AWS processor that kind of separates inference and training? Do you see any disruption potentially there with like NVIDIA?
Yeah, but they also provide NVIDIA chips. And I think if you also hear Jensen Huang, his comments are the other chips that are now are being created by either Amazon or Microsoft or Google, etc. They are tied to a particular workload which are suited for their business needs. Now, if you have a different workload, you need something which is more versatile. That's where the NVIDIA GPUs will be. Right? So let's say Amazon is running and training on a Trainium, which maybe they have made Trainium to work with the kind of data that they have. Or if you talk about the TPUs from Google. Google had their TPUs way before LLM started to show up, right? During the ML and the big data hype, or let's say the wave, Google had their TPUs over there, even then, TensorFlow and the TPUs. But if you need a general purpose, because there were many different type of workloads, Jensen Huang will say that NVIDIA chips are the best, and these do not, the other chips don't compete against it. But if you were to look at the thing that I don't have a visibility into, I think market is still trying to figure out, can Trainium and the other chips do 80% of what NVIDIA does at a 50% of the cost? Then maybe it's a decision that you can make as a user, saying, for these workloads, I'm fine with not getting the best performance and maybe having some higher error rate. But for these workloads, I need to have NVIDIA chips. I think that market is still open. I don't think we have decided on that yet. So if you want to
exactly. Go ahead.
Yeah, if you want to go blindly saying, I want something AI and I want to build my models, I think the default is NVIDIA.
Right, exactly. But I mean, if they had like a DeepSeek moment, kind of the same way, if all of a sudden Amazon comes out with a very efficient, whatever next generation one, then all of a sudden everything is kind of thrown, and you've wasted a lot of capex, is what I'm saying. So that's where I could see, not now, but maybe in a couple of years, the whole market fall down at that point. But yeah, anyway.
And I think currently, if we could also look at, hey, are these capex become like the investments in the broadbands that happened during 2000, right? But these companies actually have generate a lot of cash flow. Those companies were a little different. They borrow a lot of money to invest in building the broadband capabilities, laying optic fibers and all that stuff. These companies, look at their balance sheets, all pristine balance sheets. They can afford to spend so much. All right, looking at the next one, fear and greed index. We are in a caution zone, guys. We are in a greed side. And forget all analysts. This indicator, and we've been talk about this indicator every week for last 5 years. I think this indicator is a good indicator on when you should lean in and when you should stay out. Stay out means don't, not that you should sell off because there were tax consequence and all that, but be cautious or go slow, right? When it is an extreme fear, it's a good opportunity. It's a difficult to pull off at that time when everyone is running away, but that's the time when you get the bargains in the market. And when it is in a greed or extreme greed, maybe it's time to sell some calls. Maybe time not to, maybe wait for some, puts at an overall market. Of course, the individual stock is different. So we are firmly at 71, which is maybe we are in the greed side, only 4 points away from extreme greed. I see a question from Asif. I'm a 10 plus year Google investor. But congratulations. You've done well for yourself. I'm not that old in Google. I only got in Google after COVID. You're much better investor than I am. Unless their other bets kick off, their mode seems to be getting challenged. Their mode is customer eyeballs, loyalty, these are customers. Like to have new gen AI search app, there's no aversion to switch as it's with the desktop app. Yeah, so few days ago. So Asif, you will do good for yourself. Go and watch interview of Sundar Pichai with Dave Friedberg of All In. So he was not invited in All In, but Dave Friedberg, he had a separate interview with Sundar Pichai and probably questions around how about the search going toward, question that you raised is consumers are using LLM Gen AI search apps. So Sundar did drop a hint of their new product, kind of a search AI-based search product that they will soon be revealing. I think Google I/O. He said they'll share more details on Google I/O. But that's a good interview to watch. Actually, I was watching late night, maybe around post midnight. I watched half of it and then I slept. So I need to watch that fully myself. But for any Google investor, that's a good interview to watch. Go to YouTube and search for David Friedberg plus Sundar Pichai interview. I think it's almost 90 minutes long. So he did address a lot of these questions. But yes, Google moat has been challenged. I mean, for many years, Google was thought to be an invincible player, but it has been challenged. The question is, has the market punished Google more than what the damage that, let's say, ChatGPT has done to it? And can Google bounce back? Then that's a future that we need to worry about. So there's a long comment from Vinay. I'll skip that one. Asif saying insane adoption of paid Gen AI apps among non-tech friends. I'm paying for Gen AI apps, and yesterday I had some good time in terms of trying to, work on some scripting with Gemini. But yes, I agree. Now the question is, the search, the overall amount of search for Google is still growing, not at that pace that it was. Can they monetize and have Gemini compensate for the loss of revenue coming from the blue links? We don't know. All right, buys and sells this week. Again, not a recommendation, but more from a transparency perspective. I don't want to come across because the stock has gone up 50% and then I'll come out. I bought it. So what did I buy? I won't tell you upfront. So this week, these are all stock buys and sells. Don't follow me. This is Doximity. Doximity had announced results this week and the stock was down 20%. I don't know why. I know, okay, let me put it this way. I know why the stock was down, but I don't think that it deserves such a harsh treatment. Stock was down because the guidance was lower than what the market was expecting, and that the stock got punished. I had a short put on it, and which was expiring on May 16th, and I was okay to get it assigned, so I never managed it. So I got assignment on this one, and I think after that, stock went up. So net, I'm still positive, but who cares about what happens in a day or two, right? A lot of sells happened this week, and I did not want to defend any of my, short calls or covered calls. Basically, what did I sell? I sold a little bit of SPY and closed one of the short call. So basically, maintaining same deltas. iBit, which is a Bitcoin ETF. And if you look at iBit, it had a great run because Bitcoin itself went up from 90K to now 104K. Maybe I will look today where it is today, but it has got a nice run up. And I had a couple of covered calls at like 52, 54, and I did not really want to defend that. So I let that called away. Palantir, very hot stock in retail arena. I love the business of Palantir, but I can't love the stock pricing at this point of a time. I'm okay to buy expensive stock. I'm okay to buy overly expensive stock, but I'm not okay to buy or hold egregiously expensive because then it becomes a gamble, right? It was a great stock when it started loading at $7 all the way up to $26. And then I started not defending my covered calls from 65 onwards. So I had a covered calls on Palantir that got called away, and it is fine. TMDX, I told, I think one of a previous session, I'm a little concerned around how the whole healthcare and the payment it works, Medicare, and this very opaque stuff. And so I thought I will never be able to make Transmedics a big part of my portfolio. Then I really don't want to keep it just for sake of keeping it. So I sold a covered call, got called away. No concerns on that one. Arista Network, ANET. I had a covered call on it. I did not defend it. It's a good company, right? I still hold, okay, let me give you another insight. I still hold some iBit. I hold 20% of what I used to hold in Palantir right now. Again, these are gambling chips on Palantir. It's not investing in Palantir. That's my, scratching my Vegas itch. Okay. Transmedics completely out. Arista Network, I still hold, and I immediately sold a short put on this one. So we'll acquire more, if it comes back. So I still like Arista Network. It's a good company. As a business, it's a good business. So if my short put get assigned, I'll buy it back. So these were the buys and sells that happened this week. I still have 23rd May. We'll probably get to know what happens next week. Asif, can you please share in the cover call details? Why not roll in, or otherwise, what do you think valuation crazy for near midterm? Oh, no, I don't think the valuation is crazy, Asif. So my cover call strike price was, I think, 85. And then I also sold, basically I started as a strangle, then I kept rolling the short put. Overall, I think I got almost $6 of premium. So the cost at which it got called away is 91, right? And then I already sold a put at 90. So again, why I did not defend it is because this is again driven by AI, right? I have a lot of other AI stocks also. Number two, if you guys recall, not long back, I think in April, I had a short put that got assigned couple of contracts on SPY, and then I was suddenly negative cash balance. So I've been paying margin interest. So I thought maybe this will bring in some cash. I'll pay less margin interest on this one. And if it is not giving me much diversification, right? So I decided to, let some of the share got called away and sold a put against it. The business is fine. If I did not have the margin interest that I was paying, probably I would have defended it. Okay. I have no concern about the company as such, but then the company is also bound by what is happening on a general AI discussion. And I own Google, Meta, Apple, QQQs. All those are also impacted by that. Maritza, what was your strike price on Docs put? I had 1-2 at 50, I had an ordered buyback at 75 and executed more. I had a 55. So you were able to exit it, and I was not, because mine was 55. So Friday morning itself, I got a sign. Didn't have to wait till the end of a Friday. So, but I had almost, I think, $5.50 of premium in that one. So it's okay. Sri, my calendar call was not hit. TMDX, you are out. I mean, maybe TMDX is, I don't know, maybe it'll turn out to be good business. We're not. I mean, we bought it at around what, some 60 or 70 bucks. And that time it was a new TMDX and Arista Networks were two new businesses that I'd acquired. I think last year was in 2023. I forgot. And I told you guys, right? I'm gonna watch them every quarter, go through their earnings to see if I can build my position in it. Arista Network, I got building my conviction. I think, yes, this is a company that I want to hold. This is a CEO. She's fun to listen to. Jayashree Ulal, if you jump into the earnings call, great CEO. Management team is good. I'm like, yeah, I can stay with these guys. Transmedics, first of all, I don't understand the healthcare side of and then there are some other issues going around with Transmedics. I don't think I can make a bigger one. So I'm out. Maybe I'll need a new ticker now for my portfolio. Because I've been becoming a little more choosy on what I bring, what company I keep. So now there is space for one ticker. TMDX is out. So we'll see. If you guys have a suggestion on some company, let's bring it up. Maybe, if I like that, maybe I'll start with like TMDX, dip your toe position, and then we'll watch it. And if it feels good to own it, then we'll increase it. Anyway, earnings next week. It's a light week, at least for me, because Baidu and Xpeng Motors and NanoX, these three companies that I'll be interested in all these three are a very small portion of my portfolio. So I'm going to have some relaxed week comparatively, on this one, on the upcoming one. But Palo Alto, the cybersecurity, it's a big firm in cybersecurity. So if you own some cybersecurity companies, it might cause, some turbulence in that one because they are reporting. Other than that, what else you guys looking at? Anyone else looking at some companies for this week? No other earnings? What is everyone indexing? Let me ask other question. Any one of you hold any of these companies that are reporting earnings next week? Home Depot. Anyone owns no Home Depot owners? Okay. Ramka says ADI, Autodesk, and Deckers. Okay, analog. I don't think I've owned these three companies anytime. Ramgon's Home Depot. Marisa says Home Depot will be interesting to get a pulse on the economy. Yeah, the things like Home Depot, Walmart. I'm not sure Home Depot does tell us a lot about how the housing economy is doing, but not sure if it'll tell us about how the general consumers are doing. I think McDonald's and Walmarts are probably better harbinger of how the consumer is feeling. Asif on Palo Alto Net Worth, Workday, and Ashwin says he has a Intuit. Cool. I don't own any of these yet. PNW. How's PNW? I mean, the Nikesh Bajaj is a great guy if you listen to him, but I'm not sure on the stock side. I've been range bound for almost 2 years now. How's been the experience with PNW? I mean, I've never owned the stock, so I've not done like a due diligence on this, but I do know, and I've noticed that, it does a lot of acquisitions. I generally don't like company which is too much acquisitive and trying to create a new businesses through acquisitions and not organic growths. But again, I've not looked into this company. My comment is just based on what I come across on the news that they acquired XYZ companies. I know they started as a on-prem firewall kind of cybersecurity, and when the market turned towards the CrowdStrikes of the world, then they tried to acquire companies to basically pivot. But I'm not sure how that has worked out. As you say, it's not bad. 2x since 2020. I owned it. Okay, I knew I had to be in security 2020 when we had 1 week lockdown on our infrastructure, when we needed to move secure network, etc. Yeah, I mean, if you picked up CrowdStrike, Palo Alto, Zscaler, yeah, these are some of the names that were super hot during COVID. I mean, I think the first IPO that I reviewed in what almost 5+ years of doing this was CrowdStrike IPO. I think the second one was Rocket Mortgage. But yeah, CrowdStrike became public at that time. Anyway, maybe I don't own any positions in Palo Alto. Maybe I should look at it now that we have a slot opened up for a new ticker. All right, let's talk about the crypto market. Let's look at the top 10s and then we'll open up. Let's go to the crypto. Yeah, nothing has changed. I mean, it's been range bound over the last one week, except something on Ethereum. And Bitcoin is again 103. If you listen to talking heads on YouTube or on CNBC's or Bloomberg, the price predictions are at all the places. I've heard from 150K to 1 million this year. I've also heard about 13 million in next 20 years. Who knows what's gonna be, right? So, but it's been a range bound for I think a couple of weeks where we were here at 90 and then last week it jumped up, and this was during the crisis on the tariff. It was down to 80, I think 79 or 78. But this is a huge, like almost 50% up in last 4 weeks, right? But back to where it kind of started the year, which is close to 100K. And again, those who are chartists, they probably talk about that it needs to cross 109K for its next leg, run up. We'll see where it goes. So it's not all-time high yet. All-time high was 109K, but pretty close to it. Ethereum actually had some change this week. Not this week, I think happened on 7th or 10th, or maybe 6th or 7th. They had a new upgrade that happened last week, which is called Pectra upgrade. They have a funny way to name these upgrades. Basically, it's based on a name of a star and the name of Ethereum's conference, the name of the city at which the Ethereum conference happened. So it is basically juxtaposition of both, right? So then I don't know which one it's. No, Pectra, maybe Electra is a star, and PEC came from I don't know which city where they actually had their conference. So we had a Pectra upgrade that went pretty smooth. I think it was, nobody even realized that it was kind of a non-noticeable, and that's how the upgrades should be. Right? While I was working in a tech, our best way was, hey, if your client doesn't notice that you have upgraded their servers, that's the best upgrade that we ever had, right? So they had a very smooth upgrade. Now Pectra upgrade has been one of the big upgrades of recent times. The prior one was Tencon, which happened last year. Why they had such a huge gap was because they wanted to pack up a lot of EIPs, which is Ethereum improvement proposals. There are many things that have gone in Pectra. The top three is what we're going to talk about. One is enhancing EOA wallets, which is called externally owned wallets. So basically, all they're trying to do is your wallet functions also as a smart contract for a small portion of a time, so that it can send some tokens to an address, receive something while it's doing the transaction, so that you don't have to send it to some other place. Increase the max effective balance. This is for if you are an Ethereum holder and if you want to stake out Ethereum to become a validator. Today you can stake it in like 32, right? You need to have one validator can have a 32 Ethereum only. What if you have 39 Ethereums? You can only use 32 for staking. Then rest of 7, they're just not earning any yield. So what they did is to increase the effective balance to be more. I think that the max limit is now 2096, something like that. But now if you hold 39, 40, anything less than the multiple of 32, you will still be able to stake it. Third improvement, which is a blob throughput increase. We also saw this in Dencon. I think I've been seeing this as a constant theme in Ethereum, is to allow the layer 2s, L2s, to become faster and faster. There is separate thought on why the Ethereum should not become more faster. There is some work happening there also. But during the Dencon, they Ethereum community had introduced the concept of blob, which is like a super highway for the layer 2, right? And so that means if you're doing some transactions on layer 2, they got a special path. It's like what do you call that? A carpool lane, right? Which is reserved only for the layer 2s to get the transaction quickly onto the Ethereum layer 1 and then move forward. While if you are doing Ethereum direct transaction on an Ethereum as an end user, you will go in the general lane. And now what they did is they also increased in terms of how much of a blob space blobs could be included in one, when you add Ethereum in a blockchain. So now the blob count has increased from 3 to 6, will become maximum of 9. Again, the whole idea is it will make it faster, cheaper, and hopefully will drive more transactions and on Ethereum overall ecosystem. There are a bunch of other upgrades. If you're interested in getting deep into this, some of them are too technical. I don't understand myself some of those things. So I had to go to Gemini or ChatGPT and ask them, teach me like I'm 15. Right? If I tell them teach me like I'm 5, it will probably dumb it down too much. So I was like, so you can go and use some LLM to understand what else is going into this. But this is a big, heavy upgrade. Good to see that it went smoothly. And that's the reason why we saw a big jump in Ethereum over, I think, after the upgrade had gone on 6th. So if we go back, this is where they did an upgrade on 6th, and boom, from 1.8 to almost wherever it is, 2.5. That's almost 40% jump. But still, it is nowhere where it was, let's say, December 2024. So let's a lot to catch up. And that depends on what the adoption would be. Again, Ethereum did not see the same level of interest from the institutional investors on their ETF, which have like BlackRock and other issuers have brought in this Ethereum ETF. They did not see the same level of investment from institutions. One reason is, if you stake it here, you can get a yield. If you buy ETF, there's no yield. So SEC did not allow the yield to be passed over to the investors. And maybe we have a new SEC now. We have a new SEC chairman, Paul Atkins, who has come and talked about saying we want to have more sensible regulations for crypto economy than if they allow the yield to be passed over to the investors. maybe we should see more institutional interest in this one. For now, institutions are majorly focused only on Bitcoin, nothing else. JP Morgan turned bullish on Bitcoin for whatever. Who cares? Who cares what JP Morgan does? Who cares what BlackRock has to say? I'm watching this for a long time, and they always chase what the market sentiment is. Rick Reader, I mean, very well-respected guy, has come on many, if you listen to Bloomberg or CNBC's, everyone listen to Rick Reader in terms of what he has to say, right? And then in, I think, 2021 or something, when BlackRock was about to get in, and he made some predictions which were like way off, and none of them have panned out. So, and not just Rick Reader, I've seen forecasts from Standard Chart analysts talking about 360K Bitcoin during the 2021 bull market because it was going up. No one, don't blame them. No one knows what the future is going to hold anyway. But they have to say something, so take it with a pinch of salt. What I want you to look at is Arizona established cryptocurrency reserve fund. I think that's the first state KDOP signed, so that we do have a cryptocurrency reserve fund for the state of Arizona. We still have to see when at a federal level. I'm not too hopeful that we will have it this year. There are much other higher priorities for Donald Trump. And I know he took a lot of money from crypto lobbyists. They were I think the number one or maybe number two lobbyist after pharma. I don't know. Maybe the top lobbyist in 2024 election. So eventually it probably will get done, but don't pin your hopes that it's gonna get done sooner. We have a lot of other stuff that probably is more important. But at a state level, I think there are at least 10, 12 states. Maybe next week I'll bring up the chart again, which tells you at a state level where each of those bills are. But looks like Arizona has become the first one. I think Texas is very close. So let's see what happens in Texas. Other big news on the crypto side. Coinbase joined S&P 500. And that is one reason, among others, why the coin stock jumped up. Because it got added to S&P 500. That means your 401k money, I don't have 401k anymore, I have IRA. So because I don't have a job anymore, but your 401k money or everyone else's passive retirement accounts, which are simply buying, without your knowledge, they're buying just S&P, then you're buying a portion of coin. Whether you like it or not, you're getting entangled into the crypto economy. That is the one reason why a few years ago, I stopped doing the separate sessions. If you go to Meetup and see other Meetup that I host, there's a crypto group separately. But I said, you know what? Crypto and then traditional finance is getting integrated. And then over the last 2 or 3 years, I stopped doing, maybe 2 years ago, I stopped doing the crypto separate session. We can talk about in this one. You're not gonna, like I said, like it or hate it, can't escape it.
So question on that is Bitcoin also part of the 401k purchases as well?
Not yet.
Not yet.
So Department of Labor, it's on one of my checklists of what are the things that I want to see it done. One of the checklists says, so Department of Labor had issued a guideline to 401k providers, and it is like way back, I think in 2021, or was it in 2022, saying this is not a suitable investment, right? And that has kept 401k providers to allow, basically work with the companies that will allow Bitcoin funds to be brought into 401k. So once the Department of Labor guidelines is removed, then no, it is not yet. No, that's not yet removed. I was just looking at the checklist at my board, because as and when one of the stuff is getting done, I just cross it off. Hold on, let me just bring it. Okay, don't got my handwriting. So this is the checklist that I had. Oops. Okay, so the background doesn't show. So, whatever. So as and when things are getting done, so I had like hostile SEC chairman gone, SAB 121 gone, stablecoin bill not yet, FIT 24 not yet, ETF approval done in Jan, options on ETF done, DOL advice against 401k not, this is still open, BTC as a strategic reserve halfway, no more BTC sales by US government is done. Mark to market accounting that started happening from 2025. Final one is wirehouse approval for BTC not yet done. So there are a few stuff that are still waiting for to be done, right? So that 401k is not done yet. Assume Greg's question, assume Bitcoin has to be bought by the fund. So shouldn't we expect BTC to continue higher as Mike Saylor has said? Again, it is going high. If everyone wants to buy it, yeah, it'll go high. BTC in itself doesn't produce anything. It's like a gold. It still has at least some usage. BTC does not have in US, BTC does not have a usage just yet. But it could have a usage because it's a pristine collateral. It could have a usage in lending, etc. You can use this as a collateral against which then you can lend, etc. But we saw some of the unscrupulous players doing that in 2021 and then blowing up, and we had all those Celsius and a BlockFi and some of the hedge funds that three arrow hedge funds, they all went bankrupt. So, but I think we will eventually have that because there's a lot of work happening on the Bitcoin to do stuff on Bitcoin itself, create smart contract capabilities. I mean, it is still there. Stacks is one of protocol that does it, but not where we can use it. So for right now, the only use case that Bitcoin has is a store of value, which means if you hold it, it's just like a gold, probably will go up in value, and it will only go up in value if everyone else thinks that it is store of value. Right? So the adoption needs to grow. And Michael Saylor is considered as a Jesus in this. I should not say Bitcoin Jesus because that was some another person. The title was given to some other person, but equivalent of that, that's what he's considered here in the Bitcoin community, because he is like single-mindedly focused on just acquiring it. Plus, he's using a lot of financial engineering, a lot of leverage to acquire it. Leverage works both ways. So there's still a lot of bandwidth available, also buffer available to survive. But again, this is a sentiment-driven. This is you can't just value Bitcoin by traditional PE. You can only value it based on what the use case, which use case it can be applied to, and hence figure out what percent of that use case can Bitcoin gather, and then try to come up with a valuation, thinking that it is only $21 million. Overall market size is this. Bitcoin takes a 5% of it, divide by 21 million, each Bitcoin price is this. Should we care if they are required to purchase from their fund? Right? 401s because they're not buying it yet. But there are some pension funds who have started to buy it. Family offices are already being active. Hedge funds are already being active. Companies are already buying it. There is one. And if you look at, let me show you who else, right? BitcoinTreasuries.net. This is a good website to go and look at who are holding these Bitcoins, right? So from a company's perspective, MicroStrategy has the most Bitcoin. There's a 568,000. Mara, this is the miners. I don't know what is UX. Riot Platforms, Galaxy Digital, CleanSpark. These are all miners. Tesla own 11,500. Miner, Coinbase, Block, which is Square, Metaplanet, Japanese company. And then there are copycats of MicroStrategy, like Semler Scientific, Boya International, a few more. If you look at this, there are And then I was surprised to find an Indian company in this one, Jet King. And then there is which countries, and then there are private companies. Now, coming to the countries, this country, Bhutan, would have never been on anyone's radar if it is not for Bitcoin holding. No one knows which, probably, I mean, those who are from, understand the geography of Asia, probably have heard about this country. I have heard, I grew up there, but otherwise no one knows what this small country is. This is a very small kingdom. It is in the news because they have been stashing Bitcoin. They've got a 12,000 Bitcoins. And so we'll see. I'm still hopeful about it. I mean, we are still early in the game. If you ask me, I think we are still early. This is an asymmetric bet. Means if it doesn't pan out, invest small. If it pans out, and if all the promises would be fulfilled, you will be happy that you hold something. If it becomes zero, you'll be happy that you hold only few. Right? It's an asymmetric bet. Aditya, what's the thought process behind the checklist you shared? Once everything is checked off, what are you expecting to happen? Once everything is checked off, that means at least all the regulatory issues have gone away, right? And all the positive tailwinds that I was hoping for is now in place. Now the question is, how much is the market willing to adopt it and move forward with it? Department of Labor rescinding their guidance, hostile guidance against Bitcoin. At least the regulatory burden has gone away. Now, does that mean every 401k issuer will jump on to start offering IBIT? I don't know. Right? Then we will see. So at least I had my checklist on. If you think, oh my God, everything. Oh, no, there is a lot of stuff that still needs to be done. Move emotions. You can't. If you are in a Bitcoin community, you can't remove. So that's a community of hardcore emotional people. But yes, one idea is at least I track what's happening at a higher level, right? And then is it done or not done? Like today, if you're, a lot of people have think about, and some of my friends will say, I'm out of IBIT or Bitcoin because of 100K, how far it can go. And I'm looking at checklist. I'm like, we still have a lot of hurdles which are not yet removed. Imagine if all these hurdles are removed. Then I can come and say, oh, the world doesn't need Bitcoin. Okay. Today, if the world needs Bitcoin, especially in the US, even if the companies need Bitcoin or the investors need Bitcoin, there are still hurdles available, right? Hurdles in there. So I want the hurdles to be removed, then I will see where the price is going to. So if the price is 100K, I'm like, whatever. I don't care. I think it's still, if it is 100K, despite all these hurdles still there, probably then it deserves to go higher, right? So that's the idea behind having the checklist. If I do not have the checklist, then I'll be only dependent on price. Oh my God, price went up 50%. So this is what, or on the other way, you may call it as a fundamental analysis, right? On this one. Probably I will add a little more onto the L2 and the transactions once the Lightning Network becomes more active on this one. I have not added that yet. What else on the crypto side? Coinbase also acquired Deribit, right? Which is a options exchange. Once I opened an account in Deribit, but the bid ask is so wide, I'm like, I'm not doing it. So they do send me any emails, right? Like a reminder emails on. I'm not doing anything over there. But anyway, now the Coinbase is acquiring that. And the final one, Coinbase has a data breach. I think a small percent of a user's data was compromised. It's not their private keys, etc. But of course, it's their address, phone numbers, and I don't know, maybe social security numbers, which then the hacker can use to social engineer and impact your other accounts. They will not be able to take your assets if you have held it with Coinbase because they don't have your keys or not the Coinbase keys or your wallet owned, your keys, etc. But the best thing was, there's a video that the CEO Brian Armstrong has put on Twitter, So the CEO, the hackers are demanded $20 million in ransom. CEO went full Mel Gibson, like in the ransom movie. So Brian came, and I think it's a minute and a half or maybe 2 minutes. It's a small video. It's not more than 5 minutes. And he came and told, we're not paying at all. And then he talked about what things have been impacted. At the end, he announced that not only we are not paying them, I'm announcing $20 million bounty for any information leading to the hackers' arrest. So he went full offensive against the hackers. So I'm not going to pay you, but he announced $20 million bounty for someone who can lead to the hackers, right? But this happens. When you are holding so much of crypto, they will try I think someone in their customer service team in offshore location either got social engineered or was bribed enough to share and leak the data of their customers. So that's what happened on Coinbase. But I did not see, stock reacted and then the next day it bounced back. So the news came out on Thursday and I saw the stock fell down. But I think the final one, because of maybe eToro is a crypto exchange, went IPO this week. And I think eToro. Anyone invested in eToro? It was priced at 52 or something, 55 maybe. Opened at 66, 65. And so was it a successful IPO? Your high end of your pricing at which they priced and sold it was a 55 and it opened at 65. I want to see, because market is saying it is a successful IPO. What do you think? Is it a successful IPO? Come on, you must have some thoughts. There are no wrong answers. There are only difference of opinions. So my opinion, it was not a successful IPO. Because I'm viewing it from, if I want to be a shareholder of this company, I'm viewing it from a company perspective. It was not a successful IPO because company left too much money on the table. It is a successful IPO for the friends of the investment bankers or the investment bankers themselves. So they bought the shares at 55 and the market actually priced it at 65. So they did a mistake in not getting all the best deal for the company who hired them to find what the best deal that they can get from the market. So company could have raised 20% more money from the market to fund its operations, and they were not able to. It's the bankers, for them, it is successful IPO. For a retail investor, it is not a successful IPO because now you're actually have to pay higher than what the investment bankers thought that the company was worth. Right? So depends on, whenever you talk about failure or success, depends on which side you're talking from. So I hate when CNBC say that the IPO market is success. It has opened up the windows and it's a successful IPO. I'm like, not for a company. Company got fleeced. They could have raised 20% more, but they did not. For investment bankers, yes, it is a successful IPO. We'll buy some at 40 level. I did not look at its S1, so I don't even know. So I'll not buy it unless I look at S1. And I generally want to wait for a couple of quarters, Greg, before I buy anything. Ram, can you got IBIT call assigned? Oh yeah. So IBIT, it's fun. I still hold IBIT. I still hold IBIT, and probably I'm gonna sell a put again on IBIT. Right? At the end of the day, I have an opinion, but I also know I could be wrong. Sridhar, would you say the same for Korea? I think it's maybe you're referring to CoreWeave.
That's right. Sorry, my typo.
Yeah, CoreWeave. I mean, I don't like the management of CoreWeave. Right. So I probably do use CoreWeave as a trading vehicle because the premium is decent. If you look at an option premium, I in fact did after a long time I did an earnings trade. And I picked up CoreWeave because they were reporting earnings, and the option premium is heavy in this one. Let's say if you go to June, right? If you are bullish on CoreWeave for selling, let's say at the money short put, which is let's say $80 where it closed, you're getting, what is it, 12%? Almost 13%, not 12, 13% of your strike price. You're getting that much as a premium. It's a huge, I mean, it's a good vehicle because the premiums are so high. I would want to trade it, but I don't think I want to own it for the reasons that I shared when I reviewed CoreWeave S1, right? I saw so many red flags, so much of intra dealing with the hedge fund that they have, why they are paying 14% to that hedge fund. When you can get, the corporates are raising money at 6%, 7%, why you're raising at 14%? I don't get it. Just because the hedge fund is, well, like one of the investors. There are so many things, right? We talked about when we reviewed the S1. The CEO and the whole management team is a bunch of oil and gas traders, right? If they were running an oil and gas company, maybe I would have been more amenable to them, but not on this one. So I don't know. I mean, the stock is done good, and probably it will do good because now OpenAI signed a contract with them, with CoreWeave, because everyone needs GPUs, and they basically raised a bunch of money and got all the bunch of GPUs from NVIDIA, which they are renting. So business model is nothing rocket science, right? Anyone with the money can do it if they can get their hands on GPUs. So I don't think I'm going to own CoreWeave, but maybe I can trade CoreWeave because there's a lot of premium in this one. Right. Okay, let's talk about 13F. Jay, do you already discuss UNH? Nope. UNH had but let's only look at UNH, then we jump to 13F. UNH looks like can't find the bottom. Right, close to $600, now trading close to $250. Of course, it recovered a little bit in the last day. Now, it's a huge portion of Dow Jones, I think, and that's why the Dow Jones has not performed. And now I saw a lot of chatter around, is it a value stock now? If you understand the industry, maybe. I mean, the numbers. So I actually went and picked up the financials of UNH, looked through the, get my bird's eye overview, right? The way I look at any company, the numbers of the past look fine. But here are the three concerns that I had. And I think I tweeted about it or posted about it, not tweeted anymore, right? Which is, number one, I don't have a competency in the healthcare industry. So for me, going and buying an individual healthcare company is risky. Number two, they had issued their guidance like a month ago and then rescinded their guidance. Guys, what a change in a month. Third, their CEO got fired. So they say CEO resigned for personal reasons, right? So CEO got fired. I don't know what happened there. Should I connect that rescinding of a guidance and CEO together? Maybe did they have something else going on there? And then finally, I think the news came out on Thursday that the Department of Justice had now starting investigation into its Medicare practices, which I think Bill Ackman had raised a month or 2 months ago. Now, this sector, I think it's the same case applies for the TMDS, that the whole payment system is so opaque that I don't understand this. If you understand the sector, then past financials look fine. I don't have any concerns on those ones. But I have a concern on going in the future, because if I'm investing right now, I'll go in the future. So what I did eventually was I sold a put against XLV. XLV is a healthcare, right? Or is XLY? It's a XLV, yes. So when on, it was, I think before the Department of Justice, the news came out about Department of Justice investigation. Again, that's a news reported by Wall Street Journal. UNH has told that they have not received any notification from DOJ yet. Yeah, so I think I sold a put on XLV after this day, because I'm like, whatever. I don't understand individual company, but the whole healthcare sector was red because of this, so I sold a put against it. That's what I did. Jay, XLV. Oh yeah, that's what I did as well, Jay. Okay, so let's talk about 13F, and then we'll open up the floor for breakout rooms. Okay. So, like I said, I generally consolidate a lot of 13F stuff. And so let's get on to, okay, with the chip companies that the funds are betting on. So what I did was I looked at Intel, NVIDIA, TSM, Broadcom, and AMD, and then basically consolidated in terms of how much money, dollar money, is invested from these hedge funds, or let's say investment super investors. So there are like 80 fund managers that I track. So TSM is the highest one, 6.4 billion. What shocked me was Intel. It's not even $1 million. They all left. So previous quarter, I have also reviewed the same table. Hillman Fund and David Tapper had some. So I think my comment was in the Twitter, in the post was, Intel doesn't even have 100 million. I think there's some 60 million or something. And the new filing that came out, and this is as of end of March. So things could have changed after March, right? But this is what we have. This is as of end of March. Everyone chickened out. Only Davis Advisors have some $239,000 in it. So fund managers are trashing Intel and lapping upon TSM. I think the next one is NVIDIA, $3.5 billion, then Broadcom, and then AMD. That's on the chip side. Or else, let's look at, oh yeah, I think. Then I do want to see what's the fund managers doing to my stocks, the stocks that I own, right? Or did I not put the right link there? Damn, it's the same link. Okay, so we'll catch to that. It is one of those. Let's start here. 13F filings are the Mag 7 or Lag 7, because there's a lot of bet around Mag 7 is not performing, they are Lag 7. So I looked at top 10 most owned stocks across these 80 fund managers. Microsoft is owned by 39 funds, Amazon 31, Alphabet 31, Meta Platforms 28, Visa 25. They're still, fund managers are still holding these biggies, tried and tested companies, right? New things that came out was Capital One. It replaced Wells Fargo. And then TSM is a new entrant in the leaderboard. So we saw TSM like $6 billion. Also TSM is a new leader. But again, Mag 7 still owned by a lot of funds. Okay. So what's that? Okay, so let's What is log me out? One sec. Let me see if I can log back into my X account, then I can go through. One second. Okay. All right, so let's. All right. Okay, the next one. What did the fund? Oh, no. Let's prior to that was this one, right? Okay. Top bets from fund managers based on the how much of a percent of portfolio have they allocated. If a fund manager has allocated 0.1% of portfolio in a particular stock, that doesn't really mean that they're bullish. Maybe they're just taking a bet on it. So I do want to see how much conviction you have on a particular stock. Michael Burry has gone all in Estee Lauder. He sold all of his Chinese stocks. Remember the last 13F filings? David Tepper from Appaloosa and Michael Burry, they were big on these Chinese stocks. Now only David Tepper. Michael Burry sold all of his Chinese holdings. He's only holding one company, which is Estee Lauder. This does not have some of the options if they have not reported it. Or probably I don't have may not have captured the options positions in it. I do know, I think he has bought some put options on QQQ or NVIDIA, etc. But no more individual stocks, only Estee Lauder. CoreWeave, NVIDIA holds CoreWeave. So NVIDIA has a small venture arm which invests in some companies. 78% is in CoreWeave. So this is again one of those round trippings, right? You invest in NVIDIA, you invest in CoreWeave. CoreWeave buys the stuff from you. It's like you are sponsoring your revenue. That's why I don't want to be in CoreWeave. Bruce Berkowitz, Fairhome Capital, 78% in St. Joe. I don't know what that is. CS Investment Partners in Carvana. Even last quarter also we saw the same thing, but that time it was even higher. New fund manager that appeared this week is H&H International Investments, 63% in Apple. Carl Icahn is an icon, that's fine. Norbert Lu, Punchcard, Berkshire Hathaway. Well, that's maybe we should look at Estee Lauder. Did we review Estee Lauder? I think we reviewed one of the beauty companies. Now I don't know whether it was Estee Lauder or did I review Ulta Beauty. Anyway, the other thing, stocks in which the position was increased by most funds. Despite all the doom and gloom around Max Evans, 12 funds actually bought more Microsoft. 9 funds bought more Amazon. 8 funds bought more Taiwan Semiconductor. 8 funds bought more Meta. So still, the top, if you look at top, except 2 or 3, the top, 9s are all Max Evans. When this is the fund where they have added more to the positions, right? And now let's look at which is the one where they've increased. Maybe that's later. Oops. This is the one where a new position. Yeah. So this is the new positions. Which one caught the fancy of more? So 4 funds added CoreWeave for the first time. 4 funds added Capital One for the first time. Core Natural Resource. I think these are the funds that probably tracking Monish Pabrai, because CNR is a coal company and Pabrai was big on this one. 3 funds added Generac. I'm interested in Pinterest. I own Pinterest, so I want to go and see what this fund's thesis is. Maybe try to get hopefully if they share it with the public in terms of their investment thesis on their holdings, I want to go in and read through that. Right? So these are the new stocks that added by the number of funds. So I think this also, again, to give you some perspective, looking at individually looking at each one of the fund managers, it's okay. But when I look at it as a collectively across all the 80 fund managers, what's happening, that gives me some insights that I can't glean from my individual ones. What else? Okay, let's close this. Let's close this. We talked about this. We talked about this. Oh, we talked about all of them. Oh, what did fund manager do to my favorite stocks? That I've not done yet. Okay, this is the one. So I always want to track some of these stocks which are not known well in the US. You don't see, even say well in the US means the financial media doesn't talk about it, right? So I need to go and see, hey, does any other fund managers looking into this or not, right? So Mercado Libre, this is my single stock biggest position. And I looked at it. Altimeter got out completely. Belly Gifford, Stanley, Druckenmiller, they are still maintaining the conviction. Coupang, Oaktree is out, but Oaktree they had a debt from Farfetch, which Coupang bought. So I don't have to worry about it. Other big holders are all Belly Gifford, Altimeter Capital, Stan, Druckenmiller. So, and Alibaba, like I said, Michael Burry was 100% out in Alibaba. And David Tapper, 22% of his portfolio still in Alibaba. Even though he reduced by 22%, still 22% is there. And then who else? Yeah, that's the biggest one, right? And then this new fund guy, Juan Yongping, H&H International. I don't know which this is. I probably have to look into this, which started showing up now in a super investor list. Is 4.39% of fund. Right? That's Alibaba. Retail favorite Palantir. Right? No one. No so-called smart money. No one wants to touch Palantir. So I think Stanley Druckenmiller had some, exited completely, and no more. All right. So I think that's all I have for today. Yeah, I think we talked about UNH and the other stories. If we had a time, we could have done it. So I'll stop here. And if you want me to review some of the 13F filings for your stocks, do let me know.